Hey, welcome to the April 12th edition of Nasdaq Advisory Live. We're powered by Nasdaq IIIInitial. I'm your host, Will Briganti, and joining me today as my guest is Alexander Free. He's an analyst at he's an analyst at Nasdaq's London office with Nasdaq Advisory Services. Alex, thanks so much for joining the program.
Hi, Will. Thanks for having me.
All right, so today we're going to talk about MiFID II. This is a legislation that enacted in January of this year. So we've had a few months of this underway. So to kick things off, what have been some of the key aims of MiFID II on share trading?
Sure, yeah. So MiFID I was initially designed to break up the dominance of Europe's main stock exchanges. So since the European Directive MiFID I implemented in 2007, new trading venues such as the BATS Europe, Chi-X or Turquoise emerged, arguably providing investors with more choice with regards to execution prices, with the regulator looking to lower transaction fees. However, one of the main side effects was a significant rise in off-exchange trading, notably through dark pools, which occurred on the back of the regulation. So these dark pools offer far less transparency to investors, with no visibility on pre-trade orders with regard to the size and the price of orders posted by participants. So amongst a number of objectives, MiFID II, implemented on the 3rd of January 2018, was designed to encourage more trading on exchange, whether primary or alternative exchanges, to reverse this trend toward OTC dark pool trading, which has had quite a lot of negative press. So to drive this trading back to the traditional exchanges, the regulator has implemented a twin cap on equity dark pools. So no more than 4% of the total annual trading of a given stock can be executed in one given dark pool. The second cap prohibits over 8% of total trading over the same 12-month rolling period to be executed through dark pools combined. In the case of a violation of either cap, exclusion from the dark pool or all dark pools respectively is triggered.
Terrific recap. So Alex, my next question for you, what has been the initial impact of MiFID II on where shares are trading specifically? That last point you made.
Thanks, yeah. So irrespective of which time periods analysed, we can see a significant rise in shares traded on exchange, whether it be primary exchange or alternative exchanges. So for the numbers, if you look at the first quarter of 2017, against the first quarter of 2018, you see a 7% increase in shares traded on exchange. That's in euro terms. And then you can see 68% of constituents are seeing more volumes on exchange. So it's quite a significant rise. It's worth noting that alternative exchanges in particular have seen a rise in popularity. So these exchanges are taking increasing market share. So on the Stock 600, shares traded on these alternative exchanges have gone from 35.4% on average over 2017 to 37.9% in 2018 so far. So quite a significant increase. So as mentioned previously, the cap on dark pools appears to be a driver behind this increase in share trading and in the alternative exchanges popularity. However, the unbundling of research and execution fees with MiFID II could well also play a role. More transparency surrounding fees paid, we may well be entering a more competitive environment in terms of trade execution, which should see a rise in the leverage of these alternative exchanges, but also the primary ones.
Right. And my last question for you, Alex, today is obviously where your team sits, you see some of the impact with our customers. So what has been that impact so far since January on public companies?
I mean, for the initial impact would be that you could say for public companies, the obvious one would be that they can have a better tracking of their shares traded.
Sure.
So you can see the percentage of issued share capital traded over a given period if more is happening on exchange. So obviously for the off exchange, you've got very little visibility, if any. That's the initial impact. Then I think more interestingly, it's key for IR teams to be aware of liquidity. It can impact your inclusion into a given index, but also for large AUM investors, large liquidity is quite important for them to be able to make that investment decision.
Awesome. Well, we're going to leave it there today, Alex. Thank you so much for joining us live remote from Nasdaq's London office on today's Advisory Live. Thank you for being here. All right, ladies and gentlemen, this was Alex Free. He's an analyst with Nasdaq Advisory Services in London. He joined us live remote. Thank you so much for tuning in to the April 12th edition of Advisory Live. We'll see you next week.